Good morning, everyone. Welcome to our Tuesday morning trading room. Hang on here a second. We'll get the screen share going. I was playing catch up with my emails. I see, David, you're in the room here this morning, and I did get your emails. We'll see how things go here this morning. Maybe I can just answer them in the room. Save me a lot of typing. Okay. I was just reviewing Monday's session as well. It was a little bit bearish, a little bit quiet. Okay, while we're waiting for opening range and some of the dust to settle here this morning, I'll deal with David's questions, although it looks as though the market very, very bullish here out of the gate. Those of you who like your first in sync signal, looks like it's right here, your first signal of the day, and that making a very strong, quick rally, also getting to your profit target already. So a really nice way to start the day. You could be a couple of minutes in and your day's already done. Isn't that nice? All right, so David's asking, here's the question. On the E-mini, I have the E-mini chart using the standard Raptor settings, an 8-tick Renko. I'm on the East Coast. Yesterday on the E-mini chart, there was a short signal at 6:22 on my chart, which would be 3:22 a.m. your time. A number one short. I went long into the cloud and then short from the cloud on my own. My question is, would you have traded short using maybe these dots or triangles? I get nervous because price is outside of any cloud. Thanks. If you want to see the chart, here it is. Okay. Let me see if I can find your email, and then I'll see the chart here as well. Okay, so here is David's chart that he sent. Yeah, okay, so you got the standard settings. That's fine. A lot of times I'll change the Raptor. Like I said, if I get too many daybreak lines, you got a nice trend change signal here. And yes, this would be definitely pre-market. And a lot of times, the market it'll get really busy, especially about an hour before the open. This one coming a few hours before that. But yeah, a nice number one signal. Nothing wrong with that, David, that I can see. Okay, hold on a second here. We'll get back to your question. Okay, so here is a 6-tick Raptor on crude, and that's a nice number 3 signal. The market moving in to the cloud and then coming out, producing a signal. Looks like David's running a couple of moving averages in here just to add a little confirmation. And we got a 6-brick cloud, a 4-brick cloud, and a 4-brick cloud, a 446. Yeah, that looks fine, David. If you wanted to expand your clouds a little bit, you could go to a 4-tick raptor that would broaden the clouds somewhat. But it looks, so long as you're producing the signals and the signals are giving you decent follow through, that's all that you want. Okay, so David's first question is, my question is, would you have traded short using maybe the dots or triangles? I see. Okay, David says the red arrows are shorts and the blues are exits. All right, so here we go. Yeah, so you're short from here. It's okay, you know, if the cloud, if the price exceeds the cloud, if that's what you're concerned about. The cloud, of course, isn't really there, right? The only thing that's truly on this chart, it's not your indicators down here. It's not even the support and resistance lines. It's not the clouds. The only thing that's truly on this chart is the price activity. Therefore, so long as the market is continuing to make lower highs, you should be looking to sell. So long as the market appears to have a trend, you should be trading with that trend as long as possible. You will know when the trend is starting to end because all of a sudden you're going to start breaching highs and you're going to start holding lows. You're going to get that test of the extreme. You're going to break above a high, a recent swing high, and then you're going to start to suspect that maybe the trend is failing. The clouds, the whole purpose of the clouds is that we know that once the market gets near the hard edge of the cloud, we can anticipate a reaction. It's just part of the programming. It's what a market tends to do. That's why we've highlighted the hard edge of the trading band. But if the market exceeds the cloud, like here we are making a pullback now, it looks as though we have a bit of an uptrend here this morning, at least to start. The market has come back. It's hit the hard edge of the cloud. I'm expecting a reaction. Okay, here we go. We've got the reaction. If I don't really mind this trade because we've got some room to negotiate here, to do something with our stops. Yes, we're against the ATR, so that would, if I were using the ATR there to filter my trades, I would probably wait for a second push opportunity, which it looks like we got right there, and I was a little bit slow on it. But you can see, had we waited for the second push opportunity, the market rallied up nicely. Even if it didn't, even if it brought me in to this point here and then started to reverse. Let's say, oh, we're starting to reverse now. Okay, let's say we didn't hit the profit target. We're starting to reverse. I have enough room in this trade that I can start to do something with my stops, right? So I can start to bring my stops up, maybe bring it below this swing, but I'm letting trend and price determine what I'm doing with this trade. I hope that makes sense. So, you know, the market's in an uptrend, I'm going to look to buy. If it's in a downtrend, I'm going to look to sell. Whether or not the price gets outside of the cloud. Now, I tend to wait for a signal to print. I don't normally, if you're asking, do you ever go off of the warning dots? Not usually. But that's me. I tend not to be super aggressive with my entries. You could have done a little better had you taken, you know, the first signal. But again, for me, it's not about more. It's not about finding more signals. It's about finding 2 or 3 or maybe 4 signals in the day that I think are going to work and then capitalizing on those. I don't know if I'm answering your question correctly or not. See if I can get your chart that you posted. Oh, I see. Okay, hold on. This is the chart that David sent. This might make more sense. Okay, I see. Okay, so David's a little bit concerned here. Started trading here where there weren't any raptor signals. Is that okay? Yes, yes, of course. You always have your discretionary signals, right? Sometimes things, um, the programming will print when all the signal parameters are met. You'll get these follow-up signals along the way. They still tell you the programming's parameters have been met, but it doesn't qualify as one of our higher probability signals. It's what I refer to as a discretionary signal. You still have had a pullback, and you can see that you're only a few ticks from the hard edge. So I would actually consider the next signal that came out from here as a hard edge signal. Or it looks like you entered earlier, which is fine. For instance, I know Steve here in the room, he likes to use trend lines a lot. So, you know, it looks like to me what you were doing is you were pretty much taking the signal off of a trend line break, and that's fine. Again, trend tends to trump all. So here we had a number 3 signal. I didn't take the number 3 signal. Now I'm left wondering, well, should I look for another buying opportunity? Well, here we get a discretionary signal. We don't get a high probability signal propping up with it, but you can see that it's a hard edge bounce, right? The market comes down to the hard edge, it bounces, it produces a signal. So if you were inclined, there would be an opportunity to get in as well. No, there's absolutely nothing wrong with the way you did that, David. I can't see anything wrong with that. You know, same thing here. Like let's say this is kind of David's situation here where we missed the number 1 signal. Is it okay to take this signal right here? Sure. That's what it's for. It's a discretionary signal for those times that you think, uh-oh, I should have got in back here. You know, the market breaks out. Nice little retest, comes back, produces another signal. Remember, when the signals produce, you have met all the programming requirements, but we don't have the high probability prompt because there's only 3 conditions for the signal prompt, right? Yeah, no, I think you did great there, David. Okay, David has another question here. David says, last question. Ask all you want, David. So after taking a numbered signal and I get out with an amount, would you continue entering using the triangles and dots even though no more number signals show up? If the trend is strong enough, yes. Again, it doesn't go back to the frequency, right? You want to get away from this production line mentality. Rather than always re-enter, because every time you dip your toe in the pool, there is a chance you're going to suck up a losing trade. That's why we tend to gravitate toward the high probability signals. That's why I recommend you put a quota on how many times you trade during the day. People will sometimes, new Raptor owners especially, they'll send me a screenshot and they'll say, you know, what's wrong with your system? These signals didn't work out. And they're talking about taking every signal. They're talking about, and it looks like most of these signals did work out, but just for argument's sake, you know, they're taking this signal here, this signal here, this signal here, this one down here, and no, this is not what we're about. We're not about finding a dozen signals in the space of 10 minutes. We're about trying to find a handful of signals where the market conditions are right, where you can say, okay, so like this number one signal that we were looking at, the market has a trend. Yeah, check, got a trend. We produce a high probability signal. Do I think I can profit on that signal? Yes, I do. So now we increase our earnings by increasing the quantity we trade, not in the frequency of trading. I think that's, I call this the biggest kept secret on Wall Street. Because this is how you're going to make more money. You're going to, especially if you're all in, all out. And you know, several people in the room here can vouch for that. That helps. That works. If we were trading 3 contracts, there's $300 on one trade versus trying to find 3 $100 trades or 6 $50 trades, which is infinitely more difficult. That would be my recommendation. It's boring to be sure, but it will be easier to make money. And there's cheaper hobbies. If you're bored, there's a lot cheaper hobbies. Steven says, I killed it yesterday. Maybe you need to take more days off. Yeah, there's a bit of a backhanded compliment, I think. Yeah, see, I like this comment here from Stephen as well. Stephen says, "This is what has helped me. There are maybe 8 to 10 signals. I'm assuming he's referring to through the course of the session, and I just look for 3 of them, and with trend lines added, it has been much improved." Yeah, it really goes down. I can't stress it enough. It really comes down to being particular with your opportunities. The nice thing about trading, of course, is it doesn't cost you anything to learn. Right? Open up your chart, grab your cursor, pull it over, and then just scroll forward a bar at a time and say, okay, well, here's a signal. Is this a signal I want to take? Do I want to take it? Do I think, if you can think of 2 reasons why you want to take it, let's say you say, oh, okay, I think a trend is emerging and it's bouncing off of the hard edge. All right, then go ahead, set up your trade how you would, and then play it forward and see what happens. If the trade works out, fantastic. Make a note of it. If it doesn't work out, that's fine too. This is the time to learn. Why did the trade not work out? What what did you not see? And if you're totally stumped, if you can't figure it out on your own, by all means, save an image, send it to me, and I'll do my best to answer. If you send me an image, do like David did though. Please make a note of the time and the market so that I can find the area you're looking at, because sometimes, I need to scroll back in the chart a little bit and see what's going on. This trade here in particular, I might say, well, just looking at the timestamp, it's after hours. Okay, so the market's going to have less follow through. Oh, yes. Stephen says it costs to learn. Money, time, and your wife pestering you. It does. Education's expensive, as the fellow told me when I went to the store to replace a broken tool, which was my fault to break, and some dinky little plastic part was going to cost me $100. That's what he told me. He says, well, education's expensive. Yes, sir, it is. All right. How are we? Okay, opening range almost expired. It looks like we had a couple really nice swings here this morning to start the day. So we had a very strong bull push, and then the market topping out. We broke the swing low, came back. This would be the retest. Oh, no, actually they got a little higher. Look at that. This turned out to be the retest, and then another move lower. And that's where we're at right now. So we're still making lower lows so far. Maybe a little bit more bearish today, maybe. We'll see how it goes. David, if I didn't answer your question, please don't be shy about asking me to elaborate. But I honestly, from the photos you sent, I can't, or the scans you sent, I can't see that you're doing anything wrong. It looks good to me. All right, here now a little bit of an uptick. So the Hawk and the Falcon already a little bit more bullish. The Eagle and the Raptor, both a little bit bearish still. Here we are again into that hard edge. Going to be looking for a little bit of a reaction. Yeah, Antonio says, I think that ATR on the Raptor is helping a lot. I like it. It's borrowed from the Eagle, of course, but yes, I like it as well as a bit of a filter, perhaps help keep us on the right side of the market. We do have a little bit of sideways congestion going on here. Yeah, Antonio says, I'm having a hard time picking the right signals. Let me see here. I've got the euro on here somewhere. Okay. Now yours may or may not be set up the same way. I think you may be at 40 ticks, which is fine. I have my euro US dollar pair here set up at 20 ticks. What I do, and I think your biggest challenge as a trader, is to try to determine the trend. If I'm looking at this chart, it looks to me right now like this market is in an uptrend. Therefore, I'm going to avoid, for the most part, counter trend signals unless conditions are just perfect. I'll avoid the counter trend. I'm going to stay with the with trend signals. Now, oftentimes, when the market is in a trend, choosing the direction is not the challenge. For me, the challenge is stop placement. Because I don't want the stop so tight that if the market does not get up to my profit objective, it comes down, stops me out before going on without me. To that end, I usually recommend keeping stops 2 swings back, which seems a little bit generous at first, especially given our modest profit target. But what a bigger stop does for you is it really skews the probabilities in your favor. So here we have a market that's bouncing around a little bit. You can see if I had my stop really, really tight, oh, well, it didn't stop me out, but it could have. I certainly would have been sweating the trade at that point. But even if my initial stop was down here, now that the market is starting to go higher again, I can bring my stop up, essentially cutting my initial risk in half. Knowing that if the market breaches this level now, then I'm probably wise to take my loss. And then if you're able to hang on long enough, well, then maybe, you can enjoy a little bit of a run up. So I think, Antonio, to help filter out the signals, try to determine trend. If there's really only 2 options or 3 options, the market's either moving up, it's moving down, or it's moving sideways. If you think it's moving up, stay with your buy signals. If you think it's moving down, stay with your sell signals. And if you think it's moving sideways, well, then you have to wait a little bit. Well, sorry, there's 2 strategies for trading a sideways market. Strategy number 1, wait for the breakout, wait for the retest. This is what we're looking at right now. And then look for evidence that the market will continue in the direction of the breakout. That's strategy number 1. If this breakout fails, of course, if the market does not recover and head higher, then there's a good chance the market will try to test the other end of the trading range. This brings up strategy number 2, where you can look for selling opportunities in the top third of the range and buying opportunities in the bottom third of the range. Now, for these opportunities, I don't necessarily hold out for the high probability signals. Like, for instance, I won't necessarily wait for a number 2 down here or a number 3 signal down here. Rather, I will consider the discretionary signals, the follow-up signals. Now, the euro US dollar pair is kind of getting near closing time, so the market's very, very weak at this point. Not a whole lot going on. But I think, if you can do those things, if you can identify trend or no trend, that will take a lot of the signals off of the table. And then when you have your breakouts, say we do our range like this. We have our breakout. Here's now the retest, or if you wanted, you could call this the retest as well. And then you see the market's not continuing, well, then you can anticipate the market's going to try to test the other end of the trading range. You're never going to have all the pieces to the puzzle. So you may as well get used to making uncomfortable decisions, because that's really what it amounts to. All right, so here we are with the euro pair, the euro US dollar pair. Saw the breakout. Here comes the retest. Right, this was our earlier range. If the market cannot continue higher at this point, then there's every reason to believe it's going to try to test this bottom end of the trading range, because that's what they do. They'll always break out, they'll retest support areas, they'll retest resistance areas until the next breakout. Now, the market's getting a little long in the tooth here for the day, so be careful with that. But that's what you want to be on the lookout for. Trend trumps all. Oh, this is looking like a relatively wide band. And so I'm going to set up now for, speaking of trend trumping all, I'm going to set up for the counter trend, which seems odd, but it's a little bit of a play here off of the extended band. We've got a little bit of a bottom coming in. Maybe, just maybe, a quick little move back to the hard edge. Or I could OCO this order. I could bracket it. If I'm fast enough with it, I can throw my buy order in above here. I can throw my short order down below here. And these orders, again, are live when you put them on your chart. All right, let's get a stop in play. And let's get the break even going now. So this was just a little sideways range. I set up for the possible reverse, but you can't ignore the trend, right? Look at that great big trend to the short side. Oh dear, Mark left me an essay here. All right, here's Mark's comment. My recipe, he says. Find your consistent high probability setup, wait for it. When that particular trade shows up, put multiple contracts on it, pull the trigger, and go all in, all out at a consistent profit target that you know will get the follow through. Give your stop room for the trade to work, but I feel the most important part is finding your particular high probability setup that you can have confidence in over and over again. That seems to come after plenty of screen time, but once you do find the signal and your edge and confidence using it, wow, a light bulb moment. Well said. And it is so true. You are going to, I know Mark put a lot of screen time into his trading. And we do what we can to help you along, like with the high probability signal prompts and whatnot. But at the end of the day, you still do need to educate yourself, and as Mark put it, gain confidence in that signal, those one or two signals that you can feel really confident taking. Journaling will go a long way to help you with this. I've mentioned it before, but if you don't keep a trading journal, you really should. And it can just be a spiral notebook. Just scribble some quick little notes. I never refer to, or hardly ever refer to, my trading journal after I journal stuff. But the simple fact of writing things down imprints on your mind. Both the good and the bad. And I guarantee you, I will put it in writing if you want, that within 2 weeks, you will start to recognize patterns in your trading, things that you are doing right and things that you are doing wrong. It is the simplest, cheapest, most effective way to improve your trading that I know of. Okay, I'm going to follow up. Oh, shoot, Eric. It's running away on you again. I was going to say, I'm going to follow up on this really, really exaggerated number two signal. Number two signal, counter trend. So A, you first need to have a trend, and then B, you have to have a tested the extreme and evidence that the trend is not continuing. So this was my evidence right here. It did not print as a number two signal because it's just too big. It falls outside the programming parameters. But visually, it is a number two signal all the way. I'm talking about this signal right here. So the market essentially told us it wasn't going to go any lower. That's why I wanted to look to buy that. But I'm spending a little bit too much time talking. Here, since I've missed some moves here already this morning, let's do a little market structure 101. Okay. When a market is in a trend and it fails to continue the trend, once you see this failure, you'll have a pretty good idea that the market's going to try to go the opposite direction. The opposite is true for a downtrending market. This is what I refer to as the test of the extreme. I did not coin the phrase. I forget where I read it, but it pretty much sums up what's going on in the marketplace. These formations are sometimes called M and W formations for obvious reasons. Sometimes they're referred to as 1, 2, 3 tops and bottoms. Sometimes if they have a peak preceding it, there'll be a head and shoulders or an inverse head and shoulders. It doesn't matter what you call them, the principle remains the same. Once the market reverses and breaches a significant swing point, it has to be significant. You can anticipate two moves in the direction of the breakout. Move number one being the breakout move. Somewhere there's going to be a little bit of a pullback, and then that opens up again another high probability opportunity. So you've got two high probability opportunities, one when the market's starting to reverse once, and another one once the reversal is confirmed. These are things that I look for all the time on the charts. And they occur in every market. They occur all the time. This is what I would consider a high probability setup. In fact, some of the programming picks up on these things, like your number 2 signal, or your number 3 signal, or number 1 signal. These are the conditions you want to hold out for. If you don't know what's going on, chances are that the market may just be in the sideways chop and there's really no opportunities to be had. When a market enters an extended period of sideways trading, I may as well show you here too. When the market enters an extended period of sideways trading, it may be in what's referred to after an uptrend, it may be in what's referred to as a distribution phase, in which case the market is likely to break lower from there. Now, these phases, these sideways ranges can last anywhere from a few minutes to a few weeks or even a few months, depending on the time frame you're consulting. And then after that sideways range and the decline, the market will once again move sideways. This now referred to as an accumulation phase, after which the market is more inclined to rally. And this will happen again, time and again. It's just a basic market characteristic. You can take advantage of these situations by waiting for the breakout, waiting for the retest, and evidence that the market is actually ready to continue in the direction of the breakout. You know, our jobs as traders is really to try to figure out what the big players are doing, right? We're not going to move the market. We don't have the information that they're privy to. But if we can see what they're doing, then we can have that much better chance of getting on board with them. It's just like when the market makes a very quick move higher or lower. You know, like this move right here. This is a relatively fast move higher. And this will be true in the Forex market too, for you, Antonio. There's some big players involved to move the market like this. So we're going to be more conscientious of buying opportunities. So we're back into the hard edge. We're currently against the ATR, so I feel no rush to get into a trade here. But if the conditions are right, I would definitely favor a buying opportunity. Okay, so here now, an early number 3 signal. It did not print as a number 3, but you can plainly see it hit the hard edge. Why did it not print as a number 3? Because this cloud, the fast cloud, dipped just enough to spoil the signal. Does that mean it's not a number 3 signal? No, most definitely it's a number 3 signal. But you know, because conditions weren't right, maybe I'll wait for a second push opportunity. I'll allow the signal to flinch, and then I'll place my order above there. Or maybe I want to draw a trend line and place my order above the trend line. You know, there's lots of ways to do this. You have to settle on the one, like Mark said, the one that gives you the confidence to take the trade. And really, at the end of the day, that's what it's all about. You got to have the confidence in the signal that you can put some money on the trade. Okay, well, there we go. A quick little move up. I think we may have even had some positive slippage. Nope, hit it on the mark, but that's okay. And that was what I would consider a high probability signal. So we were actually playing this signal back here, but look, the number one signal ended up printing pretty much exactly where we took that signal, because that's how the programming works, right? It identified that the market conditions were starting to be bullish again. It wasn't correct for a number three signal, but you can see once the clouds got in sync, there we go. We get the number one signal and away we go. So you can start, or you should be able to start to anticipate some of these things. I know I beat this horse quite a bit, but it's so important. You need to get out of your mind as well the notion that there's only one way to look at the market. I get people very often saying, well, how do you draw your sideways channels, or how do you draw your trend lines? Listen, there's no one way to look at the market. If there were, nobody would take the other side of your trade. If you think you have a sideways trading range here, then you have a sideways trading range. If you think this is a breakout of the sideways trading range and you're now looking for a retest, then that's exactly what you have. Now, if I think this is a sideways trading range, this is the breakout, and I think the trend's going to continue higher, well, I have the market in a bit of a spot now, don't I? So I can set my buy order above there. I can set my sell order below here, because if the trend is going to recover, it has to trade above that high. If the trend is not going to recover, then at the very least, the market is going to challenge the bottom end of this trading range, and perhaps even head lower again. We'll see. We'll see if we get any follow through on that. Okay, a little bit of a recovery maybe. Okay, back inside that range. And if you wanted to be a little bit more aggressive, you could perhaps look to short on a break here. You can start to see how the market responds to these particular levels. All right. So I got the stop in there. And I'm going to take the trade to break even now, just again because of the brick size. And maybe I'll get ready with the bar high low. All right, there we go. Oop. Okay. There was a relatively high probability setup, even though here on the Eagle, I really didn't get a signal prompt, did I? But just the basic market structure, what markets tend to do time and again. Oh, look at that. Just fell straight off on the hawk, no signal there. Did get a quick little trend change signal here on the Falcon. You'd have to be pretty quick with that one though. And let's see if the Raptor gave me something. Well, again, you'd have to anticipate it. No signal prompts, but you can see how, or hopefully you can see how you could kind of anticipate that that signal was coming. I hope. It does. Try not to get too frustrated. It does take a little bit of time to learn. Wow. And a little bit more follow through off that still. Oh, nice smooth progression here. Yep. See you later, David. Okay, the band getting very, very broad here again. Let's see if we get a little bit of a bounce back. Oh, there's a quick little number 2 signal. All right, here too, we almost have the market in a bit of a bind where we can look to buy. All right, don't even need the sell order. We can look to buy above or short below. And this is based on the broad band, the fact that we had a number 2 signal. Oh, look at that. They slipped right, or tried to slip right through my exit order. We're getting some really quick little moves here this morning. I don't know if I like that. Oh, getting a bit of a late filter entry signal up here on the Falcon now. Here, we'll set this up and then I'll highlight it for you. Oh, sorry, the signal's since spoiled, so let me close that. But the late filter entry signal occurs when your filter goes out of sync, comes back into sync. Your trend line itself never changes color. Very important. And then you produce a signal. This tends to be a pretty high probability signal, especially with trend, although you do tend to get some decent follow through on the counter trend signals as well. Sweating this one a little. Counter trend, I don't know how Mark likes to do it, but counter trend, I don't mind taking a second push. All right, so whereas my initial stops may have been down here, if I can get another bullish bar at this point, I can start to roll my stops up. Because the sellers, or pardon me, the buyers are not going to be able to hold on forever here. And if they're serious, they're going to have to start moving the market up. Or is the trend going to steamroller them? Yeah, there it goes. Looks like the trend is going to give them a bit of a spank here. All right, so at this point, I would probably consider bringing my stops in at least a little bit, although it's a little bit quick. Obviously, the strong buying down here, and it looks like I would have got tagged out. Maybe I was a little fast on that, but I was surprised. Usually that late filter entry signal, even the counter trend ones, tend to have some decent follow through to them. Okay, speaking of with trend, now we have this number one signal. And because it's close to this uh, bottom right here, taking the signal on the hash mark doesn't really give me much room to do anything with the trade, does it? I can't really adjust my stops easily. So I'll employ the second push entry. Oh my, we got some nasty slippage on that. Here, we'll make it work a little extra, try to get a few dollars more out of that. I don't know why they're so thin here this morning. Hmm. All right, well, we'll put that back on the shelf. Oh, and now we're starting to get a little bit of support again. All right, a little bit more back and forth right now. Okay, here we are again. Now with a number 3 signal, we are in, oh shoot, a little bit too late with that one. I was looking at this bar here as a second push opportunity, how the bar was holding off a little bit. All right, that's okay. There will be another one. I wonder if this is going to prove to be another sideways range. In which case, we could start to get a little bit more aggressive here with the buy signals, either here on the Eagle or really any arbitrary buy signal. Oh, right now the Eagle's the only one giving me a buy. Okay, got the first micro macro cross here on the Hawk now. And a trend change signal building here on the Falcon, and a early number 1 or a proper number 1 signal on the Raptor. Spending a little bit too much time explaining things, not enough time getting the trade put on. Hazards of being a trading room moderator. Wow, there's a lot of volatility in the market here this morning. Okay, back now toward the hard edge. The Hawk already a little bit more bearish. The Falcon also working a possible trend change signal to the short side. The Eagle and the Raptor still full on bullish though. And here we come now with another buy signal. We're currently against the ATR, so if you're going to use that as a filter, I don't have enough room to do anything with the trade before it hits this high. So I'll see if I get a second push opportunity. That may allow me to set up this trade, or I could set it up on the other side of the ATR. That's doable. You know, taking the trend into consideration, or what I believe may be the new trend. Just out of curiosity, speaking of trend lines, wowie, I don't know if I can shoot one all this far. I want to make sure I'm not running into a trend line. No problem there. And from that little rally up, it looks as though, yes, it did. It already hit my profit, brought me in when the ATR flipped over here and hit my profit objective. And I didn't even have to be there. These bars are getting very, very close to the hard edge, but they're not close enough for me to visually consider them to be a number 3 signal. But once more, this is one of these situations where trend, I think trend is trumping all. And when we were looking here at the eagle, and we had the breakdown and the failure, and now all of a sudden the market starts to head the other way. Like I said, when you get that breakout and the market does not continue in the direction of the breakout, there is a very, very high probability the market will test the other end of the trading range. So at the very least, you had a good idea it was going to go up there. Look at what happened when it broke the other side, though. Breakout, retest, and this time the retest holds. So going back to what I showed you earlier, there was high probability trade number 1. Here is high probability trade number 2. And so what if you had to wait an hour, hour and a half this morning for those 2 high probability setups? We've had others, but what if you had to wait for those? Is that such a big deal? If we did it here on the Eagle, there's one $200 trade with $300 risk, so that should be manageable even for small account traders. And there's another $200 trade with, again, about $250, $300 risk. 2 high probability setups, and you could be $400 to the good just on 2 trades. That's the key to trading. And like I said, I know I beat this horse to death, but it is so important. All right, well, they're starting to get a little bit more bearish here again. We got perhaps an early number 1 signal here. The Falcon trend change got spoiled by that green line. Now we're getting a first micro macro cross here on the Hawk. The Eagle almost showing us a rule of 3 signal. Not a really good retest of the extreme, however. That's giving me a little bit of pause. Okay, here now with the number one signal, and I would probably look to take it below this prior swing low just because, well, there we go. Just because the market is a little bit erratic here this morning. All right, we'll put that away. Oh, I know, heartbreaker. Steven says, today I've been in 4 break-even trades, all of which went profitable. I know, it's frustrating at times. Oh, I didn't even see this late filter entry signal building here on the Falcon. Doggone it. I'm not going to get another chance to get in. Shoot. I saw the market stall right here, and I thought, oh, well, I'll use that as a second push. But no, by the time I got around to it, I was far too late. This late filter entry signal working out a little bit better, maybe because it had a little bit more trend momentum to it. Had to be quick. That was a quick one. Yeah, I can't get over the amount of activity. How wide is our band? Our band probably was about 50 ticks broad here, and I'm too late on this one too. Man, oh man. If I wasn't doing the trading room, I'd just be punching in buy and sell orders here. It's just unfolding a little bit too fast though. Yeah. Paul says, I don't know whether my data feed is slow or my PC is moving very quickly. It's yeah, I think it's just the order flow. There must be some gaps here in the orders this morning. Let me see if I can get the dome up here. Okay, so here's the dome. Wow, look at how they're just chewing through some of those orders. Yeah, there's nothing really heavy here. You see, they're just onesie-twosie orders for the most part. And then on the extreme, we have like, it's hard to see, it's really hard to see, but 20 or 30 orders. That's not a lot. That's not a lot when you're going out 5 or 6 layers in price. Somebody coming in with 10 orders can move the market very easily here. All right, let's put that away. Put that away before I try to do something silly. If this were next week, I could see the market getting rather thin, especially by Wednesday. But this is a week before U.S. Thanksgiving. I don't understand why it's all this choppy. But here we are, all the same. All right, back and forth we go. Starting to get a little candy striping. There's the clue that the market's kind of heading sideways. This would be our range if you're watching your trading range. And so depending on how aggressive you want to be, you can look for short signals up here. You can look for buy signals down here. And again, we're not going to necessarily hold out for a high probability signal, but see, there's a short signal, happens to be a high probability signal, but we're coming out of the top third. So I'm just going to look to short. I'm just going to look to short. And as the market gets down here, I should be taking profit all in, all out. And I should probably have a tighter profit objective as well. But the tendency will be for the market to test both zones when we're in a trading range like this. So see here now, as we get toward the bottom end of the zone, we get a little bit of an uptick as there's some buying coming in. We don't have a buy signal just yet, but you could, depending on how aggressive you want to be, you could just take an arbitrary buy signal. At least until another trend develops. Actually, I'll leave this up here for a second, and I'm not going to take the next signal, but I'll just show it to you. So if we expect the markets to still be sideways, we're getting quite a few sell signals here. Hey, Tony, nice to see you in the room. Yeah, Tony says, okay, that was my cue to move the market. Thank you very much for that, Tony. Okay, now we're here in the bottom third, bottom quarter. We haven't broken out yet, right? Okay, there's the buy signal. It had happened really, really fast, but let's just see how it plays out. And like I said, in this type of environment, you're usually better off just going in and out with a scalper's profit. So if we went about halfways. Oh, where's the buyers? Where are they? Come on, get up there. Oh, there you go. There's why trading ranges can be so difficult to trade. Try to focus on the trend if at all possible. Try to get that trend nailed down. All right, well, the buyers have shown up. My range must have been a little bit tight. Oh, yes, I guess it was. I should have taken a broader view of the marketplace. I think I drew my range something like that. But here we are off the bottom third, And here we are now in the top third. You can only do this kind of trade so many times because eventually, of course, the breakout is coming. And once we get the breakout, then we're going to look for the retest and or the failure. Steven says 7 break evens today and all went in my direction. It's a very volatile day. A break even is still better than a loss, though. That's my way of looking at it. Break even is not a losing trade. All right, let's put that away. We're almost into the lunch hour, so this sideways trading is likely to continue. Your best bet, I think, is going to be to wait for the breakout to occur and then look for that failure and or retest and then look to get back into the market. I think that's going to be your better bet today. Otherwise, they're just going to keep up the grind. And that's what it looks like they're doing. They're just going to keep churning us back and forth here. All right, gang. I think we're going to button up shop here for the morning. I will see you again tomorrow. If I had to pick a direction, I'd probably be a little bit more bullish right now, but that's just kind of a gut call. Like I say, until the market actually breaks out and stays out, it's going to be a little bit dicey direction-wise. So be careful. I will talk to you tomorrow. Bye for now.